Greetings everyone, Joseph James with your nightly newsletter brought to you by the schooloftrade.com. And in today's video, April 4th, 2009, that's a Monday morning. Today we saw extremely low volume and we had to wait quite patiently throughout the entire morning. As you guys know, we came off the DAX markets being closed on Friday, and we have both the Asian markets and the UK markets are observing May Day, which is today, of course. So with that said, we had some low volume and we had to really be disciplined and wait patiently for our moves to happen. Before we go into the market today, let's take a look at our wave indicator, guys. If you're new or if you're unfamiliar, it's very simple. The wave indicator is going to give both long and short trade signals throughout the day. Once those signals fire off, we're going to use a specific set of trading rules, and we go over those rules inside of our live signal room, which opens up at 7:30 a.m. Eastern Standard Time, Monday through Friday. Now, of course, we'll go over those rules in specific detail with you guys in the live signal room, so come join us. But assuming that those rules qualify this as a trade that we're looking to take, we then wait for price to come patiently to our trigger point. That's right. We have a predetermined trigger point in the market where we always wait patiently to see price come to us. And of course, we use precise entry orders such as limit orders to get into the market using one of three different entry techniques. Once we're in the market, we then have the luxury of using the same great efficient and almost effortless method of trailing our stop and managing our trade along with the James Wave method of trading. Guys, it's called the Wave Indicator. For more information on it, send us an email, sales@schooloftrade, or just join us for our free 30-day trial. You can join in right on our homepage. Now, let's talk about the markets we saw today. Today was Monday, May 4th, and of course, our first job for every James Wave trader is to identify. Now, we want to identify what type of market we saw this morning. So as always, guys, we open up our signal room at 7:30 a.m. Eastern Standard Time and we look at the markets. What did we see this morning? Well, we had some sideways trading, mostly due to extremely low volume in all the markets that we trade. So the low volume, of course, came from the fact that we're looking at a little bit of a hangover from the weekend, right? We had the DAX market closed on Friday. We also have this morning, the Asian markets didn't open this morning, so didn't have much direction for us traders this morning. And of course, the UK markets as well, all in observance of May Day. So even though a lot of markets were open, at least the U.S. markets were open, a lot of the Asian and European counterparts were closed, which means a lot of the volume wasn't there this morning. So anyways, we opened up our charts this morning at 7:30 a.m. and we see sideways trading. We also knew that we had a 9:30 U.S. market open. When our U.S. markets open up at 9:30, we had a 10 o'clock pending home sales number. And then, of course, we always know that around 11:30 a.m. Eastern Standard Time, we've got lunch to worry about. So with that said, job number one was to identify. Job number two, of course, is to adjust. Now, by adjusting, what we mean is we're looking at a sideways market at 7:30, which means we need to wait for a breakout. We also know that because of our news events, we set our alarm to define our windows of opportunity. And then last but not least, because of such a low volume, sloppy, sideways type of day, we of course want to adjust our management style just ever so slightly. In a sideways market, we take our money and run because we do not want to give this market an ability to take those hard-earned profits back. So job number two was to adjust. And of course, job number three, as you guys know, is to execute. On the left side of your screen, we have your slower time frame. On the right side of your screen, we have your faster time frame. Again, we start with our slower time frame first. And remember, guys, at 7:30 a.m. Eastern Standard Time, we do all of this from scratch. So come join us tomorrow morning, 7:30, and we'll do all of this for you guys right there on your charts in front of you so you can watch as it plays out right along with us. On our slower time frame, we knew that we had a sideways market, right? Low volume in today's market, which means we wanted to identify our brackets. We then moved our brackets from our slower time frame over to our faster time frame because, as you guys know, we wait for price to come to us and we trade using our faster time frame. So now with the identification process done in our slower time frame, we shift our focus over to our faster time frame, and you'll notice where we've drawn these yellow boxes. We call these our trade zones. Now at 7:30 a.m., we define these trade zones well ahead of time. And then all we need to do is wait for price to come into those zones for us, of course, to look to take our trades. Well, it didn't take very long this morning. Just about 8:30, half past the hour of 8 o'clock, we initially broke to the downside out of a sideways trading bracket the DAX had been in for quite a while. and we had our first opportunity to take our trade. Entry here is at 35.5. Now this first move to the downside into our trade zone got us initial 15 points. Entry at 35.5, and again 30 minutes past the hour. Entries at 35.5, and that move alone at 15 points. Now take your profit at 4, take your profit at 8, and then trail all the way down to lock in profits there on your final portion of your position for a total move of 15 points. Once we have a short signal fire off, we have our initial entry, and then we have our potential re-entries. All we have to do is continue to use our specific rules, and our rules will tell us when to do the trading. Of course, it wasn't long thereafter the first entry, 40 minutes past the hour, 8:40 a.m., we got our re-entry at 26 even. Now this, of course, is what we call a scratch trade, or a small nickel or a dime. That is, remember guys, we all want to be taking these big home run trades throughout the day, but we also look for these little nickels, right? These little dollar bills, these little singles, these small winning trades that allow us to pad our pocket as we move towards our daily, weekly, and monthly goal. So even though the first move got us in for a nice 15 points, the second move was very small, but at the same time, at 32 euro per point, at 32 euro per point times 3.5 points per contract, guys, you can do the math. Altogether, this one move to the break to the downside probably got you in and around the direction of your daily goal. And of course, we always had to wait patiently for price to come to us. Let's take a quick recap real quick. Job number 1 was to identify. We identified this morning as being a low volume, sideways trading range bound market across the board, which means that we had to wait for our breakouts into our trade zones. So job number 2 is to adjust. After we've identified what type of market we're looking at, now of course we adjust our methods accordingly. Meaning now we wanted to wait for that breakout to the downside. We waited patiently for price to break into our trade zones. Once we saw price get into our trade zones, well then guys, our job becomes very easy at that point. We then let our specific trading rules do the trading. Make sure to join us next time, guys, and as always, I hope it helps.